Hey everyone, welcome back to Corporate Decoder. Today, Abeona just filed an 8K about their shareholder meeting, and I'm seeing a couple of interesting results that tell a story. Quick note, this is not financial advice, just my take on public filings for educational purposes. While most proposals sailed through, one key change that was proposed did not get the shareholder backing it needed. And that might signal something about the company's future governance. This is a report that companies file when something major happens. In this case, Abeona Therapeutics Incorporated held its annual shareholder meeting on the 12th of June 2026, and they're reporting on the votes that took place. Abeona Therapeutics Incorporated is a biotechnology company focused on developing therapies for rare diseases. We saw them recently announce their first quarter financial results back in May, and they also had an investor presentation furnished in an 8K filing just a few days ago. So the company has been active. They have a market cap of about $315 million, and we've seen some insider selling from their CEO just a couple of days before this filing. Let's dive into the votes. First up, the election of directors. Two individuals, Keith A. Golden and Bernhardt G. Zeiher, Maryland, were elected to serve on the board until 2029. Looking at the vote counts for Keith A. Golden, there were over 28 million votes in favor, and just about 1.3 million against Bernhardt G. Zeiher. Maryland also received strong support with over 28.1 million votes for and about 1.5 million against. These numbers showed pretty clear shareholder confidence in these director nominees. Next, they had an advisory vote on executive compensation. Think of this as a say-on-pay vote. Shareholders approved the compensation for the named executive officers with over 23.3 million votes in favor, though there were also over 4.5 million votes against. This shows general approval, but also some dissent among shareholders regarding how the executives are being paid. Following that, shareholders ratified the appointment of Deloitte and Touch LLP as their independent auditor for the fiscal year, ending the 31st of December 2026. This is a pretty standard vote, and it passed overwhelmingly with over 40.5 million votes for. This reassures investors that the company is maintaining proper financial oversight. Now, Proposal 4 was about approving an increase in the number of shares reserved for issuance under their equity incentive plan, often called a stock option plan. The plan is to increase the number of authorized shares from 8.4 million to 11.5 million. This type of proposal is common for growth companies that want to attract and retain talent by offering stock compensation. It passed with over 23.9 million votes in favor. This indicates that the company wants to continue using stock as a form of compensation and is signaling future dilution, which is something investors always need to keep an eye on. This is where things get really interesting. Proposal 5 was to amend the company's charter to remove the advance notice provision for director nominations. Essentially, this would make it easier for shareholders to nominate directors without having to give the company a heads up within a specific time frame. This is often seen as a move towards giving shareholders more power and flexibility. However, this proposal did not pass. It needed a supermajority vote, a hefty 2/3 of the outstanding shares, but it fell short. The vote was just over 24.5 million in favor versus about 4.6 million against. The fact that this proposal failed is significant. It suggests that a majority of shareholders, or at least those who voted, were either not in favour of removing this provision, or there were enough abstentions and broken non-votes to prevent it from reaching the required threshold. This could signal a desire from a segment of the shareholder base to maintain a more structured and perhaps controlled process for board nominations. Or it could simply mean they were unconvinced by the arguments for the change. The filing is signed off by Joseph Vazano, the Chief Financial Officer. Looking at the bigger picture here, Abeona Therapeutics is navigating a path for growth, and shareholder input is clearly being considered, even if not all proposals get the green light. The failure of Proposal 5 to remove the advance notice provision is likely something to watch. It might mean that the current board structure and nomination process are preferred by a significant portion of the investor base, or it could indicate a lack of strong shareholder activism pushing for more governance flexibility right now. It is a subtle but important indicator of how shareholders view the company's governance. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description.